It's Just Business with Steve Thomas and your host, Chris Larry.
Hello and welcome to another episode of It's Just Business on the Hogstye Network, a show where we look at the dollars and the cents of the sports business media empire in both its glory and its crumbling nature. Steve, how you doing today?
I am doing all right. Happy New Year to you.
Happy New Year as well.
I hope, certainly we all hope that 2021 is a slightly better year than what we've seen, for sure. The other exciting thing is, of course, what happened in the big Washington versus Philadelphia game. You know, because we are recording this before the game, but you listening to this will know. So the question is, of course, did Washington crumble? Or did they actually stand up and beat an inferior opponent to gain a probably undeserved playoff spot? So who knows? I don't know. Hard to say.
It should be interesting. And yes, those of you in the future, if you want to text us and let us know how it turned out now, go ahead.
I just saw part of Back to the Future last night. So if Doc Brown is out there, please let us know so we can play some bets.
Right, or at least I don't know, save Alex Smith's calf or something. All right, well, that's for the other show, but we actually are going to stick in the land of the Washington football team. More obviously on the business side of the ledger. And as the NFL season has had no shortage of storylines for the team on the field, it's actually been a pretty tumultuous off the field season as well for Daniel Snyder. In fact, I think that his football team is, in the mix has sort of helped kind of keep some of this on the back burner for him. But give us the updates of where we are as our sort of resident Snyder watcher.
It's just crazy what's going on here this offseason. I've been saying that Hollywood ought to make a movie of this, but it just occurred to me this morning as I was preparing for the show that there's no protagonist in this story. It would not make a good movie because every one of these people are totally unlikable. Not one of them is trying to do the right thing. There's no struggle between good and evil. It's just all just bad, So I don't know how this could be made a movie that anybody would want to watch. So here's the latest. We've been over this, 2 or 3 times, I guess, so far? Something like that. And the reason we keep coming back to it is just it keeps getting more and more dumb, every time. So the latest thing that has happened is twofold. Number one, and most importantly, the NFL had intervened in this ownership drama. Because remember, to set the stage, if you haven't been following this, there's 2 separate legal battles going on. Number one, Dan Snyder is suing an Indian gossip website. Indian meaning from the country of India. Because that website published scandalous rumors that appear to be totally untrue that Snyder was involved in the Jeffrey Epstein scandal. And Snyder believes that one of his minority business partners, Dwight Schrute, is behind those rumors. And he further alleges that Schrute created those falsehoods in order to leverage Snyder into in their attempt to sell the minority shares of the team. So that the sale of the minority shares are what is at issue here. Now, we haven't read any of these documents because they're not public, but there is supposedly right of first refusal that Snyder has over the sale of the minority owners' shares. So what they did, meaning Fred Smith, the CEO of FedEx, Dwight Schrute, and Rothman, the other partners, they package them together and are marketing their 40%, it's like 40.4% or something share. So Snyder apparently is willing to purchase the shares of Rothman and Smith, but not Schrute. So the lawsuit revolves around whether he can do that, because it's packaged as one sale, not three separate sales. So that's sort of the nature of the lawsuit. But the fun part is what's happened in this lawsuit. And the latest thing, well, last time we talked, we told you that the financial advisor who's doing the sale had been allegedly sending text messages to Snyder, alleging that he knows bad information and stuff. Then we heard. Let me back up. I'll get to I was about to go into the sexual harassment part, but let's skip that. So the latest thing that's happened is that the minority partners allege that Snyder sent thugs to the home of the financial advisor to intimidate him. Snyder, of course, says that's totally untrue, and filed a motion for sanctions in court, asking for attorney's fees because of it. There's an affidavit by the financial advisor, Moog, M-O-A-G, Moog, that alleges all this. And then, most importantly, though, the NFL had intervened in this lawsuit some time ago because there's an arbitration clause in the partnership agreements and in the NFL ownership agreements. So the NFL said, hey, this has got to go to arbitration. They want that because then the records are all sealed and they're not public. So the federal judge actually agreed with the NFL. So just this week it got kicked back to arbitration. And so the ownership part will now be sealed, and rumors and records will be hard to come by. The Indian website part is still in court, but that's in a court in India. So information just got a lot harder to gain. Chris?
I think it's interesting that you started to go off on these tangents because,
I got to keep it organized. There's so much to it.
If this was a folder, you could call it, Snyder problems, right? But really, it really is a couple of distinct subfolders within that. And so this isn't one narrative. This isn't one storyline. I mean, so you have, and yes, there's connections, there's common tissue. The kind of prime mover of it all is this ownership fight. But, you've got the sexual harassment stuff is a story on its own. And maybe the most potentially damaging to Snyder, for the long term.
With the NFL.
Yes, with the NFL. But whatever the allegations or the reality or the public perception, NFL's paranoia, all those things that the sexual harassment suit drives has really just been used as a cudgel, has been leverage by this ownership group to try to force the issue of their ownership dispute and their dispute between those four parties, or really 3 against 1. And so I think it's really fascinating how these stories, like they confuse themselves, but I appreciate how you kept them on separate tracks, because to understand the totality of the story, you have to sort of understand the sub-narratives.
Yeah, so now's a good time, since Chris has rightfully introduced the sort of Snyder folder organization style. So the sexual harassment part is this. We all know about the Washington Post stories. We don't need to go over that. So the woman who Snyder originally hired to investigate the team as a result of the Washington Post sexual harassment allegations is a lawyer from Washington, big-time lawyer named Beth Wilkinson. Now, I talked on this show about how there was a massive conflict of interest in Snyder hiring a lawyer to investigate himself. And lo and behold, I was right, because the NFL took over the investigation and has now retained Wilkinson individually. And this has happened since our last show, too. What I'm about to say. So, several years ago, Snyder apparently got sued by an employee alleging sexual harassment. Snyder settled that lawsuit for an unknown amount, and the records for that lawsuit are now sealed. So Wilkinson filed a motion, as did the Washington Post, to unseal those records. And thus far, the records are not unsealed. So that's the sexual harassment part of it. So part 1 is ownership dispute. Part 2 is the Indian website stuff, which is linked to part 1 by Snyder, at least, because Snyder thinks that Dwight Schrute is behind the Indian website Epstein allegations. And then part 3 is the sexual harassment stuff. Now, Chris, you said, and you're right, that's the part that can get him into most trouble. Because do you remember the last and only owner I can think of that got forcefully kicked out of the NFL? You remember
Jerry
who
Richardson?
it is? Yeah, remember why Jerry Richardson got kicked out of the NFL?
Yeah, it was the racism was the bigger headline, but it was the sexual harassment part that seemed to be the death knell.
Yes, that's exactly right. And it was sexual harassment claims against him personally. It wasn't that he had scumbags on the staff, because every NFL team has that, to be perfectly honest with you. But it was that Richardson himself had done stuff. So this lawsuit, whether true or untrue, the sexual harassment lawsuit, is something that Snyder would have gotten rid of immediately. Wanted to, because that's the last thing he wanted anybody to find out about. So it could have been, I caution everybody to not read into the fact that he settled a lawsuit, especially in this case. It could be complete garbage. It could be true, it could be complete garbage. We don't know. And he had a very strong motivation to settle immediately, because this ownership stuff, NFL billionaires are used to ownership disputes. What the NFL will not tolerate is, especially in this Me Too climate and all this, they will not tolerate sexual harassment. So that's, I think, the bigger problem for Snyder, because all this other stuff is just money at the end of the day, and they're playing dirty pool, but it'll work itself out. But it's the sexual harassment part that's a serious problem for Snyder.
Well, it's just that he's put himself, he's in so much jeopardy on that front, both in what the NFL. You're right. What the NFL cares about, the growing public perception of and I'm not talking about the football culture, the business culture that he's overseen, right? So it's one, it hasn't touched him directly yet, but as Steve has detailed, we're getting closer and closer, right? But if the public perception and the good reporting by places like the Washington Post and the New York Times about the sort of, 20 some odd year business culture of this kind of harassment, then that just gets everything closer to Snyder, and that's the problem. Now, the real direct line connection to the ownership dispute is that especially how much animosity it is now, is the churn that kicks these stories out, right? It's what brings it up. It's what we're gonna the threats of unleashing these stories. It's what's, if this was if Snyder was a relatively squeaky clean owner, both from the sexual harassment stuff, and maybe he was just sort of a middling owner whose team had been, mediocre over the last 20 years. If Snyder wasn't Snyder, basically, he was your average kind of faceless NFL billionaire owner. A dispute amongst co-owners, as you're right, this would be a pretty standard issue around billionaires and in the league, and you'd have lawyers and they'd figure it out, and a sale, it's a hot commodity, so a sale would be relatively easy at that point. But Schneider is Snyder. So you
just said Schneider is Snyder.
I wish he was fixing Bonnie Tyler's bathroom. But not
There's
Bonnie Tyler, whatever her name is. But it's this churn that there's this surface area that you can attack this guy on, and because it's become so dirty amongst these four individuals that every skeleton in the closet just becomes a business tactic against Snyder. So that's actually the really fascinating thing. None of this stuff would be coming out without that. And if he had ran a relatively kind of status quo operation over the 20 years, this ownership group wouldn't have these bombs to lob at him.
Yeah, he's been a horrible owner. I mean, outside of the field, on the field stuff, he's been a terrible owner in this regard. And there's something that's going on here that nobody's pointed out yet that I want to bring up. Because the media, either the media is getting this wrong or there's something in the partnership agreements that is different, because what the media has said is that Snyder is blocking the sale. Now, that's not how a standard right of first refusal works. What a standard right of first refusal in business is this. It says one party if there's an asset for sale, I see it in real estate a lot, but this is the same thing in like shares of a company, like what's going on here. What it says is if somebody wants to sell their shares, another party has the right to buy those shares at the price being offered to the party selling them. So in other words, if Chris holds a right of first refusal over an asset that we hold, say stock, and I want to sell my stock, and so I have my neighbor offer to buy the stock, I have to take that offer to Chris and say, Chris, I have an offer for $1,000 for my stock. Do you want to pay $1,000 and buy those shares instead of the neighbor? You would in that scenario, if you had a right of first refusal over the stock, that's what Chris could do. What Chris couldn't do is just block it entirely. Okay, Chris couldn't say, I don't want to buy it and you can't sell it. So that's not what a right of first refusal is. So there's something else. Either the media is getting this completely wrong, or there's something else in the partnership agreements about authority for a sale that we don't know about. Because Snyder, on a regular first refusal, can't just block a sale. And yes, the dispute is whether the three minority owners can package it together or not. But what the Athletic printed, and by the way, the latest in the Athletic story is from December 29th. WFT partners allege financial malfeasance. Dan Snyder calls that scandalous by Daniel Kaplan. Excuse me, that's the latest story. There's something in here that's wrong because, again, they're talking about Snyder blocking a sale, and that's not what a right of first refusal is. But yeah, so all of this is linked. All of this is linked. Believe me that Dwight Scharr and Fred Smith and Robert Rathman are praying that this Dan Snyder sexual harassment story gets uncovered, because that's the way to leverage the NFL. If it comes out that the story's about Snyder, diddled a secretary or something, or at least and that's the allegation, and there's enough evidence to make him look bad, that might make the NFL finally throw their hands up, because at some point enough's going to be enough with the NFL owners. And it's, by the way, it's not the commissioner. Okay, the commissioner's a puppet. It's the other owners. It's the Bob Krafts who had his own problems, the Jerry Jones, and the other influential owners. At some point they will be tired enough of Dan Snyder, they will kick him out. And so the minority owners want enough crap to come out for that to happen.
Totally agree. And but what I find interesting is if you follow, especially the New York Times reporting on it, and they've been on this story as a national story for about 6 to 8 months, more so on the machinations between the owners than, sort of the Washington Post and New York Times are competing on this story. If you kind of care about that, you can kind of watch them horse race a little bit. And the Post angle has definitely been the sort of sexual harassment culture. That's where their scoops have come from. The Times has been a little bit more laser focused on the machinations of this ownership dispute. And if you follow the New York Times reporting on this, if you're, as I am, in the camp that you'd love to see Snyder gone, the New York Times reporting is not positive on that front. Its reporting over time has really been around that in some ways, now with the sexual harassment caveat, but that to the side, that the trend line is that the NFL probably is on Dan Snyder's side on this one and would like this to get handled, dealt with, the minority shares resold, bought by Snyder, whatever that is going to be, to happen and to move on. And if you look at read the runes, so to speak, and what the NFL's done on that front, they're on Team Snyder. They're not. I would say that they're circling the wagons on one of their own is how I would describe that. Now, the sexual harassment stuff could be the giant kind of thing that destabilizes all of that, in which they have a different version of carrying on. And I find that, to me, the Beth Wilkinson part is a real clue that backs up my theory there, because they want it handled, but they want it handled in a kind of, can you please get this taken care of? That's why I think they picked Beth Wilkinson and then said, Snyder, we'll let you hire her. You need to hire somebody. We wanted it to be her. You hire her. You drive the car. And then when it started to get out of control, they pulled it back. But to me, that was another sign that they're in Snyder's, until it gets too hot, they're in his corner right now.
Oh, I think you're right. I'm glad you brought this up, because that's clearly the case for now. Yes. the fact that the NFL was so insistent on intervening and getting the ownership case pulled in arbitration is that sign right there. Because who are these arbitrators? We don't know who they are specifically, but I guarantee you is that they're NFL buddies, okay? These are people who the NFL knows. The arbitrators are people who the NFL knows, and the arbitrators know how the NFL wants it to turn out. And yeah, I think they just want this to go away. They are not mad enough at Dan Snyder now where they want him to go away. They want the mess to go away. I think that's a very good point, and you're right. And we haven't seen a sign yet that indicates that they're getting tired of Dan Snyder. I think they're tired of Smith, Rathman, and Shar more than anybody else. That's exactly right. And the other thing is there's skeletons in all these guys' closets. You don't get to be a billionaire in American business without having some skeletons, okay? All of them have some skeletons. I'm not saying they're all fondling their secretaries, but all of them have business skeletons in their closet, and none of them want any of this to come out. And so I think it is kind of literally a boys' club of protectionism encircling the wagons. I think you're right. I'm glad you brought that up.
Yeah, and not because they're, I think they would love for Dan Snyder to wake up one day and say, you know what, I'm selling the team, I'm out. I'm not saying he's popular at NFL meetings, but
he's clearly not. By the committee assignments he has, he's not popular at all.
No, they would love to not have him in their ownership club, but at the same time, you have to remember kneecapping another owner is kind of a DEFCON 5 move, not because it would be that difficult necessarily or, yada yada, but for what exactly Steve said, am I next is what goes through all of the owners' heads. And so if they sort of break that seal, and the Richardson case had enough uniqueness, he was ancient in terms of age, he was probably already planning on selling. I mean, there was a lot of things that made that case a little bit unique, but other owners
he was obstructionist in the last CBA negotiations as well.
Right, he was bad for business in a lot of ways. But owners don't want to make it easy for the league to X owners out. They don't want to break the seal on that happening.
Yeah, and I think, again, I want to emphasize this because I don't think the public really understands this. Roger Goodell is not in charge, okay? Roger Goodell is a sock puppet. And he's the public face, but he's literally getting paid to be the bad guy and to prevent the owners from having to be the bad guy. It is the owners who run the league. You have to understand this. Roger Goodell is not running anything. Roger Goodell is, if you own a gas station, okay, you're going to have, you own a chain of gas stations. You're going to have a manager who runs the gas station on your behalf and runs the gas stations. And all is the day-to-day operations guy. He counts the money. He makes sure the shipments get there. He makes sure the employees are on time. Whereas the owner steps back and he may negotiate the contracts with Exxon to get the gas in there. That is what Roger Goodell is, okay? Roger Goodell is the guy who's doing the employee schedules, whereas the owners are the people negotiating the gas supplies, okay? Understand that. So it's really that Dan Snyder has to irritate his fellow billionaires enough to make them want to get rid of him. And thus far, as Chris rightly pointed out, they are circling the wagons around him probably because they know that all the same stuff is going on in their offices too, and they don't want it to come out.
Yeah, Goodell is basically a weak CEO with a strong board.
Yeah, I'd go along with that. Yeah. I'd almost call him a COO more than anything.
That's a good point. Yeah, COO is a good equation there with no CEO and a strong board.
Yeah, exactly. Right.
And if any of you have to deal with boards in your career, having 32 board members cannot be pleasant.
It's herding cats.
Yeah. So yeah, it's what talking about this as a movie, protagonist or no, you definitely have tons of elements, right? We've got obviously this sort of sprawling sexual harassment piece, but you've got thugs at doorsteps. You've got foreign websites. You've got like executive assistants, stealing documents and shipping them to minority. I mean, you've got a lot of bizarre plot points.
Except one thing, there's nobody to root for. All of them are bad guys.
Yeah, no, there's no one. But a good adult thriller doesn't necessarily need a protagonist. If you have,
you have to have the audience, gives the audience somebody to root for, though.
Well, yeah, you'd have to invent like a whistleblower that put their neck on the line to break the story, or you turn cancer survivor Ron Rivera, into the you'd have to you could dig around, but yeah, you'd have to invent one or bake one from half started.
Yeah, you'd have to invent something. Yeah, you'd have to have the innocent secretary who blew the whistle on the sexual harassment stuff or something.
Yeah.
Rhiannon Walker maybe is your prime protagonist.
Right. But that's only a certain angle of the story. So, the one thing, and I know he's not everyone's cup of tea, and he's not always my cup of tea either, but Tom Lavero has had a pretty interesting take on this that doesn't get reported on much, is that Shar, do you know who one of Shar's good friends is, and sort of the reason that he's in this world at all is Joe Gibbs.
Really? No, I didn't know that.
So Dwight Shar and Joe Gibbs, now I don't know this, this is 15th hand at this point. But, Tom Lavero is a pretty good reporter and been connected for a long time. He's been talking about how Dwight Shar and Joe Gibbs have been close for a long time. And Shar's an investor in Gibbs Racing, et cetera, et cetera. So there's a very overt connection. So it's really fascinating, and considering, Gibbs has been influential on Snyder up to and including basically getting Ron Rivera hired. So that we have evidence in the last 6 to 8 months. So I wonder that angle.
That's interesting, because what I was about to say in response is that other than the Rivera angle, Gibbs has kind of been silent on Washington for a long time, and it makes me wonder if he's a bit disgusted by the nonsense that's going on. And he certainly doesn't want to touch or come anywhere near a culture of sexual harassment, because he's the CEO of himself. First of all, I think Dan Snyder, Joe Gibbs is a genuinely good guy, and he's classy. But more than that, he's a CEO himself, and I think he doesn't want. I've been sort of wondering in the back of my head where Gibbs has been, because he's not mentioned word one about Washington, and maybe he's intentionally staying away from all this nonsense.
Yeah, no, it's super fascinating. In fact, one guy's an investor in as a CEO Gibbs of Gibbs Racing. One guy's Shar is financially linked to that company, that brand, and one isn't. So yeah, that's a fascinating. I'm kind of hoping some other people pick up on that part of the reporting, but I find that super interesting.
I hope they give credit to Chris Larry for bringing that to the forefront. If they do,
well, I got to reference old crank Tom Lavero, but
no, that's very interesting, and you'd have to think that Joe is probably disgusted by all this stuff.
Yeah, which I think actually motivated his Ron Rivera suggestion too. So they're not necessarily not linked, but he obviously, that was a pretty momentous piece of advice, he's stayed quiet on it, but that's a pretty impactful, which all reporting basically give Gibbs a chunk of credit on that hire, all reporting. And that's still a pretty big voice.
Yeah. And I don't want to get into Rivera, and we need to move on, but I think relative to these stories, Rivera has been very, very smart in staying the heck out of it. You do not want the football coach and the de facto general manager commenting on this stuff and getting embroiled in it, because then the media won't leave him alone either, and that's not good for the on-the-field product. I think Rivera's best accomplishment this year has been keeping the football operation separate from all this stupidity that's going on, because this kind of thing would bring down other teams.
Oh, if this was still Gruden or Zorn, or think of some of the other, I think even Shanahan, which I think obviously smart guy, obviously good football coach, but I think did get kind of caught up in the pettiness, You think the other coaches would not necessarily have done this, good and bad football coaches at that. So, we don't want to get too much into the football, but, it's amazing that the Washington football team is playing a game that matters, literally the last game of the regular season that matters, with the year they've had at every angle. It's a testament to Rivera.
It really is. Yeah, I totally agree.
All right, so let's move on. We'll stick in the NFL, kind of a quirky, funny, interesting, but still pretty business-related story. Also follows a sort of thread we've covered this year in a way, which is sort of the entrepreneurial nature of our today's modern athlete. But Russell Okung of the Carolina Panthers has agreed or asked and received, or in some way his contract stipulates that he be paid part of his salary out in the cryptocurrency Bitcoin, which I just, full disclosure, my job is tangentially related to cryptocurrency, so I have some pedestrian understanding of it. But I found this just hysterical, even as a headline, and then pretty interesting if this is a harbinger of things to come, and probably a sign of cryptocurrency's maturation in the business world. But Steve, do you have some details about his contract?
Well, the details of the contract actually aren't public. First of all, Okung has been trying to get this done for years. He apparently asked the then San Diego Chargers, when he was with that organization, to do it, and they refused. Carolina finally agreed to this. So beyond contractually, no, we don't really have much to go on contractually. There is a CNBC article about this. What is this dated? Dated December 30th. Russell Okung's Bitcoin salary could trigger more pro athletes to invest by Jabari Young. If you want to read about that, that's where to go. So anyway, I don't think the Panthers really care. And I don't think any NFL team should really care, because what's the difference? If they're buying Bitcoin for Russell Okung, it doesn't cost them anything. As long as whatever service fees are attached are paid by the player, why should Carolina care about what a player wants to do with his salary? So to me, that's the less interesting part about it. The more interesting part is why a player would want such a. Apparently, he wants. It's a significant amount. I'm trying to find it here. I think it's half. I think he wants almost half of his salary in Bitcoin. I think that's insane. Now, my full disclosure is I don't know much about Bitcoin. You know far more about cryptocurrency than I do. But what I do know is that it's an extraordinarily volatile investment. And, it's a little bit of a misnomer to call it a coin, because it's not money. It's not official currency at all that is sanctioned by a government somewhere. And so it's not backed by a federal government, any government. And for that reason, among others, the valuation has gone crazy up and crazy down. So it's very volatile. And so Okung is taking a big risk by investing that much of his salary in it. But I guess my takeaway from this is I don't know why any NFL team would care at all if a player wants to do this, as long as it doesn't cost them any more money.
Yeah, I totally agree. And just to give you a sense of the volatility here. Volatility, that word. Yeah. A year ago, basically, January 5th, one single Bitcoin, which is not a physical coin, it's a concept, basically. It's probably more similar to a stock note than a dollar bill, although a stock note is still a physical thing, but it's similar.
Regulated by the government, and a Bitcoin is not at all.
Not yet, anyway. So on January 5th, one single Bitcoin was worth $7,355. Pretty good, right? As I update my Coinbase account right now, one Bitcoin, and you can own shares of one, so it's not like you either have one or zero, is $31,220.25.
But it's also fallen off the shelf at times, too, completely.
Yeah. So in March, so sort of early pandemic, it had dipped to as low as 5,600. But then from that March, it's not gone below. Oh, actually, on March 12th, it was 3,000. So on March 12th, it was 3,000. Has not gotten anywhere near that low, and it was right around 10, between 10 and 12 through a good amount of the spring and summer, and then lately has just gone bonkers. So it's like it's anything else, right? It's not that different than the stock market in terms of things can, rise and fall, pretty easily. The big difference is this is still so new that people don't necessarily understand fully what drives. They can't make educated guesses nearly like they can a smart person can in a stock market about what's going to rise and fall. I don't know what's
driving the valuation of Bitcoin. Maybe you know more than I do about it.
Actually, the interesting part about this year is that it pretty much, now I'm not super smart about this, so somebody who really knows these things could disavow me of some of my theories, but it's actually mirrored the stock market pretty closely. Like a lot of when it's risen and fallen this year, the cryptocurrency market basically acts in a similar trajectory, which is kind of counterintuitive to especially the early advocates of this that thought it was a hedge against the stock market. They thought it was more like gold, right? This is what when the market goes, you put your money in this and it's a different kind of thing and you can diversify that way. But actually its ups and downs haven't been that dissimilar than the stock market. And then similar, Bitcoin is a leading coin, and there are a bunch of coins that act along with it. So like in a stock way, so if your blue chip stocks do well, there's a set of smaller stocks that generally rise and fall alongside it. It acts similar to that. So in a way, it's just a similar market like commodities or stocks.
Now, I'd like to ask you to explain to the audience. I could do this, but I don't think I can do it as well as you can. Explain to the audience what a Bitcoin is, because I think the name Bitcoin, and that's the one everybody knows, but there's multiple, like you said, cryptocurrencies. But I think the name, because it has the name Bitcoin, I think the average listener here who's not in this world really doesn't have a good understanding of what it is. So
I'll return to it's similar to a stock note, right? So, but basically, it's actually all of it's digital, so that's a given, but it's conceptually pretty analog. How these coins are created is that supercomputers, or banks of supercomputers, solve computational problems at high speeds. Things that humans can't do at this kind of speed in terms of crunching numbers, math, I'm not going to be able to explain it that in depth. And that's what mining is. And so basically the coins are rewards, are bounties that these supercomputing farms are solving. So that's when you hear people say coin or Bitcoin mining. Now, this is, at this point, often in China, but not exclusively in China. These supercomputers are these, warehouses of supercomputers that are basically solving esoteric math computational problems that sort of help the overall computer network. This kind of goes to like how the cloud works and stuff like that. To maintain this level of sophisticated computing, you need massive computers crunching numbers. And so someone at some point said, okay, to motivate people to do this, to turn their computers towards these problems, there needs to be a reward. And that reward was these kind of coins. And so that's what mining is. So if you hear someone say Bitcoin mining, really think about a warehouse in China of like a server farm looking warehouse, and they're just off putting these coins. Now, this is difficult to do, right? For a lot of reasons.
Can I stop you right there? Can I stop right there? So what this really is an investment in increased network efficiency.
Yes. So that was the original problem to solve, right? So all of this financial ecosystem that's come out around that is all incentives. It's all building a business structure around getting people and computers and to put their energy towards this. So crypto is that incentive structure. And like that's why mining, that's why this, and that's why it's called this, because there's only a finite amount of diamonds or gold, right? You think of tradition or ore or whatever. Like those are not
a commodity.
Yeah,
physical commodity.
Right. So eventually we're going to mine all of that, or we're going to have to wait for nature to produce more, which would take 100 years or whatever. So it's not dissimilar in that this is also, no one knows when the sort of fossil fuels will run out, so to speak. So that's why the mining analogy really works. And so as that becomes more complex, and then you have the market dynamics, you have a bunch of people buying or selling it, so supply and demand then takes over, and that's what drives these wild fluctuations in price. But especially if if Okung's got a smart or has a smart person about how to play this particular market, you could imagine if he signed. Remember, he got paid out, in March 7th or whatever at $6,000 and just let it ride. I mean, that's a pretty good return.
It is. You have to take a long view of this or really be really good in reading the tea leaves. And I don't know how anybody could be good at reading these tea leaves. Probably not too many. So this is the reason why it's also so volatile, by the way, because there's no government regulation or oversight at all, and it's dealing with something that 99.9999% of the public, even the investors, probably don't really understand very well. And so this is part of the reason why it's so very volatile. So, but to bring it back to the NFL, I think that if this becomes a thing and a lot of players want it, it's probably going to be addressed. At some point, it would have to be addressed between the union and the NFL. To sort of put, I hate to use the word regulation, to sort of put some guidance on what NFL teams can and can't do. Because, again, my position on it would be, if you want to get paid in puppies instead of money, fine. If you want to set a valuation on a dog and you want to get paid in 1,000 puppies instead of money, fine. So that's a terrible analogy, but it's the same with the Bitcoin. If the Carolina Panthers owe him $1 million, and so they invest $1 million in Bitcoin in his behalf. So what? It costs the NFL nothing. The part of the problem would be sort of setting the market, I guess, for this, setting the stage, for lack of a better term. But in essence, it ought to not matter to an NFL team because it's the same amount of money.
It's gone up $3.52 since we've been talking. The
it went down $5 just since you've been talking.
I think a couple things. One, in terms of like a governmental regulation, and governments all over the world are thinking about how to deal with this, but and
they don't really understand it. It's part of the problem.
Yes, and to give it a U.S. context, there's a company called Ripple that. Their business model is basically making software products for governments and financial institutions to make cryptocurrency more viable, and you have the tools to deal with it. And they have a coin called XRP. A lawsuit against them by the U.S. SEC, Securities Exchange Commission, just got announced, I think, a week ago, 10 days ago. So, this is, those questions remain. And I think that actually goes back to where it sounds like the Panthers were, resistant for a while. And that's because I don't know if teams want to be associated with this to a large degree. Its history has been definitely very weird and dark web and used as a way to basically launder, money. And it's got some pretty nefarious background. So I can imagine...
There's been allegations that the Russians and the Chinese are involved in this stuff.
Yes, and as I said, I think something like 70% of the world's crypto mining operations are out of China at this point. So there's a lot of that stuff that I don't know if it seems, kind of dirty for the NFL.
I think there's also a tax problem associated with this because nobody really knows how to tax this.
But you wrote, not puppies, but,
that was a horrible analogy. You get the point, a commodity, a physical commodity.
Yeah, but employees in jobs... Giving compensation in terms of ownership or shares or stock is becoming more commonplace in all kinds of work where businesses are operating in that way. But so it's not surprising that an NFL player would want something similar, but I'm trying to rack my brain. Can you remember a similar story about a player wanting part of their salary and just in the stock market, in traditional stocks?
Zero. I can't think of one. I've been thinking about since you brought the story up, Chris, and I can't think of any, to be honest.
Because that wouldn't be dissimilar in terms of the mechanics, but I think Okung here is, cryptocurrency or not cryptocurrency, I think it's just interesting and looking for compensation that isn't, direct deposit.
Yeah, no, I agree. And I can't think of anybody. I really can't. I mean, you have to have a certain type of personality to want to do this at a great extent. You have to be a risk taker. You can't be conservative in financial outlook. I'm talking about, not politics. And so this just isn't my world, because I tend to be very conservative about that kind of thing. But pro athletes, by their very nature, are risk takers. So it doesn't surprise me that you have a guy like Okung, who's probably somewhat smart about the cryptocurrency world, would want to do this. But yeah, I think the NFL teams just don't really know how to handle it. And let's face it, they're run by old men. And old men, at this point in their lives, probably are not too involved in cryptocurrency. They all have their own businesses, all of that, and they're probably not too involved in the crypto world. And so they don't understand it and kind of resist it a little bit. Yeah,
I wonder if a sort of new, slightly younger owner in Carolina is actually what unlocked this happening.
Tepper?
Yeah.
David Tepper, isn't that his name? Yeah, remember, he's the guy who was behind and then pulled the plug on the football league, the one before the XFL.
Oh, yeah, who knows? The Ebersol League Ebersol,
yeah, that
right?
one, yeah, whatever that was. He was the one that pulled the plug on that league.
Yeah. So interesting. We'll see how it works out. I mean, especially if Okung has a good trading agent, he'd probably do pretty well for himself. But you got to,
yeah. Look to see if this becomes a thing, and if it becomes a thing, then you're going to see the union in the NFL get involved. I'll say that much.
For sure. All right, let's move on to our next, kind of a quick story, but it appears that, it appears that a past, kind of irrelevant and sort of never was NBA player is teaming with a sort of irrelevant and, long off the charts rapper to purchase a no longer relevant shoe apparel company. Is that correct?
Yeah, that is exactly right. So this is just so crazy and sounds ridiculous, which is why I want to bring it up. Baron Davis, the NBA player, former NBA player, and Master P, who's the hip hop mogul turned, one-time agent turned investor and all kinds of things, want to buy Reebok from Adidas. So Adidas owns Reebok. Now, Reebok, at one point in time, had some street cred, but they've lost all that years ago, and it's not a popular brand in terms of the public consciousness and pop culture anymore. So Baron Davis and Master P want to change this. Now, here's the part that boggles my mind the most. The asking price is $2.4 billion. These two guys don't have $2.4 billion. Who are their investors? Because I suspect that, by the way, this story is from our favorite site, Front Office Sports, dated December 29th by Pat Evans, called Baron Davis, Master P in Talks to Buy Reebok. That's where we saw this. So I have a feeling that Baron Davis is involved in this in the same way that Magic Johnson is involved in the Los Angeles Dodgers. Because if you recall, the media spun the sale of the Dodgers several years ago now as a Magic Johnson ownership group. And what it really was is Magic had like 2%. He had like $50 million. Very small chunk of change in it. And he wasn't really that involved, and he's not really that involved. So I suspect that the Baron Davis part of this is probably a lot less than this story would give you, than this story would make you believe. So it's not surprising to me that a guy like Master P would want to buy a brand like this, because then he can sign up a bunch of culturally relevant athletes in musicians, namely hip hop people, and attach their name to it and kind of turn it into a thing. That's the point. I just don't know where they're getting all the money for this. There are investors behind this that we don't know about, and I think both of them, but especially Baron Davis, is probably just a public face. Thoughts?
I agree on Baron Davis. Master P is actually kind of an interesting story. You know, he's got entrepreneurial chops. You know, he ran and still runs No Limit Records, which, you know, especially in the late 90s, early 2000s, was just minting money. So he's actually got some, you know, he's shown himself to be a pretty good business person over the years. I'm looking at one story that says his net worth is reportedly $200 million. That's a nice net worth. We'd all be so lucky. But I think it does. Well, it's a lot of money. Sounds like a lot of money. It is in fact a lot of money. It does demonstrate that Master P, and this is now probably going on, you know, closing in on 25 years, has been a success.
It ain't by Reebok.
It's not billions.
Money.
It's not billions.
No.
And you're also talking net worth, so that also includes the home that he lives in and the children he takes care of and the, you know, running his, you know, it's not 200 in a bank. So
that goes to show that there are real investors behind this that we don't know about, who are not public people or companies.
Right. Yeah. And now they may be people Master P's worked with for some time, right? He might be the, you know, so I think Master P is probably real in terms of the business. I think Baron Davis is definitely the figurehead. And by the way, if you need Baron Davis in 2021 to be your NBA basketball culture face, that's a bad sign. That's a bad sign. He was a talented player, all-star, etc. But like even in his era, he would have been what, the 10th or 15th best player in the league?
Yeah, he's not LeBron James and never was.
Yeah, no, he's not even James Harden or Russell Westbrook.
He wasn't even James Harden when he was at his peak.
Yeah.
You know, and yeah, he's not the public face that says this is a monumentous, relevant cultural event. If Baron Davis is your public face, it says, I couldn't find anybody else. That's what it says.
Now, what's interesting about Master P is that he did build his fortune on being very niche. So, like, even you know, he might just know a market and realize, you know, that he could make money, not necessarily taking on Nike, but, you know, carving out a niche in the marketplace and being able to make it profitable. His career in rap would suggest that that's possible, but it's still a big, huge bet.
Yeah, and I don't doubt for a minute that I think you're right about Master P. I think he can do this. You know, he's the type of guy that could turn things around. And he is, if you don't know, I don't know one thing about his music, but I do know what he's been involved in, and he's been involved in a whole lot of things that have all, for the most part, been successful. He's running an agency, sports agency, that had some stumbles at the beginning, but I think he's really doing it now, just as an example. So can Master P turn Reebok into a new Nike? I think he has a fighting chance on it. All our point here is that neither he nor Baron Davis are the money behind this.
No,
not in any way.
Master P is probably the spokesperson and figurehead and maybe even corraller of that money. Yeah.
Yeah, he's the public face, and he's dragged Baron Davis along for whatever reason, probably because he couldn't find anybody else to try to tackle Reebok.
It's probably just because they're friends.
Yeah.
All right, so we're going to do our kind of a little bit of a, you know, the year has turned a page. It'll be a couple days old by the time you're listening to this, or who knows, maybe be days, weeks, months old. But as for right now, we're going to name a story, you know, a story or theme from 2020 that we think was the most interesting and maybe one that has legs going into the new year. Steve, do you have one off the top of your head?
Yeah, for me, it's got to be the Dan Snyder story. Because one thing we've never seen before this year is his hold on the ownership crack. We've seen the on-the-field product be just absolute toilet water for decades, granted. But this year is the first year we've seen his hold on ownership become more tenuous. So I thought that was a major story. And it's an NFL. It's so big that the irrelevant Washington Redskins have become relevant. because of what is going on. This is a story that the NFL is talking about. So for me, that's the one that has legs. And it's not anywhere near over. These fights tend to go on and on and on. So that's the one for me.
I was tempted to go with a theme of athletes as entrepreneurs because we actually cover that on a pretty regular basis. It takes a lot of different twists and turns of everything from Bitcoin to personal brands to venture capitalist investment groups. That's been a theme of the show I find interesting. But I think if I have to pinpoint one story, it really was the California law giving college athletes the chance to monetize themselves. Now, that story may, seem small, and in some ways it is kind of small, but why I pick it is because it's got those ramifications that we continue to keep talking about. And we talk about NCAA's problems and their potential and probable crumbling. And that could just be decades of malfeasance and decay. That's happening. But this California law seems to be the battering ram that may take down over time these decaying walls.
That's a really good one. And we spent a lot of time this year talking about it. And yeah, I agree. It's finally something the government of California did that I agree with. There's one thing of 1,000. I think that story has major ramifications nationwide for the survival even of the NCAA. And so, yeah, because you and I are both on team blow it up, and I think that's kind of the first step, and that California lawsuit was kind of the genesis of it. So that's a great one.
All right, so if you've got them, tweet the Hogsty, or It's Just Business, or reach out, or just yell into the void. We'd love to hear if you've got them, and we'll be looking forward to another year of stories. Steve, I'm sure the Hogsty Network's got some interesting content coming up with the possible playoff run.
Well, we'll know by the time we don't know right now as we record it, but we will know when this episode comes out whether the Hogsty will be transitioning into the off-season, our regular off-season routine, or whether we will do hardcore Hogsty playoff analysis. We will know. But content-wise, Rick Snyder's show, Seasons of Discontent, will come to an end for a while. It will go into hiatus after Washington's season ends. But we will go on as we always do with our either playoff analysis or off-season, player position group analysis and all that stuff. We'll have all of our regular written and audio content.
So they'll either be breaking down the Tampa Bay Buccaneers or Justin Fields. One or the other.
Yeah. Yes. There you go. Or both.
All right. Well, we'll see you in a couple weeks. Happy New Year.